Hi folks, I'm Ming from Volition Properties, where we help you reach better outcomes through real estate. If you're new to the channel, I've been an investor since 2001, and we've helped our clients invest in over $250 million in real estate. Today, I've got co-founder and business partner Matthew Lee from Volition Properties, and we're going to talk about our predictions for 2025. Yeah, it's going to be interesting because this is a crystal ball exercise, so we'll see how accurate we are when you guys are watching this video in 2025. We want to run through a couple of things. We want to run through what we think is going to happen in the market, and then later on we'll probably have a second video explaining deeper how the things we're predicting are affected, how that affects the actual market. So stick around for that other video as well. Welcome, Matt. Nice to chat. I mean, we chat all the time. But nice.
Thanks for having me.
So awkwardly formal.
Thanks for having me on our channel.
Let's get into this. Let's start with where we think things might go. Let's break it down. So let's start with single family market. We can talk about the condo market and talk about the investment market as well. And for folks who are newer, it's Toronto we're talking about. It's the center of the universe, right? So we're going to talk primarily about Toronto, about the what we see happening in here. Some of it might apply to the outskirts of Toronto, so like the Oakvilles, Newmarket, stuff like that. But primarily we're talking about the Toronto market here. So. What do you want to start with? Let's start with single family.
Yeah. So hold on. What do you said you were going to break it down into a couple or three different areas. So why don't we provide an overview and then we'll dive in.
Family, then. That's a good one. Yeah. So single family has been like crazy hot. We're seeing multiple offers right now. Not unusual. If you've got a good property, I should really preface this. If you've got a good property right now, we're not unusual to see 10 offers, 15 offers on offer night. We had an open house 2 weeks ago. There's like almost 100 people that attended that open house. It was crazy. And that's what we're seeing in the city. This does not mean that if you have a crappy house, poor product, that you're going to get nearly that kind of traction. What we're seeing it on are like nicely renovated turnkey properties, Instagram worthy stuff. The demand is absolutely there for those kind of properties. And when we're talking about single family, these are homes for your average person not looking to rent out portions of the house, just looking to live in it for themselves and their family. These are semi-detached and detached homes, to a little bit lesser extent townhouses. We're seeing this as well, and the downtown core. So Dovercourt, Wallace Emerson's, Plater Estates type neighborhoods in and around the Toronto core. What I think that means for 2025. I mean, like Matt, you have any input on what you think that's going to look like next year?
Yeah. Well, I mean, we're seeing this correlated to interest rates, right? A couple of years ago, interest rates up, prices down. Interest rates up, prices down. And now we're starting to see the reversal of that trend. Basically, when interest rates went up, there was a freezing of the real estate market. And so in the single family space, there just wasn't people buying. People were just on the sidelines. But what's important to understand is that demand didn't just disappear. They just went to the sidelines, right? So people have been just waiting. They've been on the sidelines waiting for an opportunity, waiting for the right time. And when the drop in interest rates happened, we've seen multiple drops, and then we saw like a 0.5% recently. That is starting to give the consumers confidence again. Not quite in the same way that we saw it back in early 2023. Early 2023, they paused interest rates, and everyone was like, "Oh, this is the end. This is the end of this supersized rate hike cycle," and if you remember, Ming, early 2023 was crazy. We're not seeing that right now. Or sorry, the couple of interest rate drops that's happened didn't spur that type of activity. It was a lot more measured. People were a little more cautious. I think it was a very classic example of what's the saying? Burn once, something. God.
Oh yeah. I know
Well,
the
anyway,
one.
fool me
I
once,
don't know the
shame
song
on
either.
me. No,
Burn me
yeah,
once,
yeah. Anyway,
shame on you. Burn me
yeah.
twice, shame
So
on me.
anyway, they
Yeah,
didn't want to be burned again. So it was a lot more measured
yeah,
of an approach this time, but the writings on the wall. All signs are pointing to continual rate drops, and that has given people confidence. And so that's only happened over the past few months. The
yeah.
first couple of rate drops earlier this year, middle of this year, didn't really spur that same type of activity. The point being is that demand is still here, and it's just been pent up for a couple of years. And so we're starting to really see that accelerate now at the end of 2024, and I think that is indicating a really, really, really active spring 2025.
Yeah, and I think we can break that down even further into like the categories. We'll call it like price points. We can call it of single family. The people that are really most impacted by interest rate changes are going to be those at the lower end of the market, right? Like, if you're in a financial position, and most of us are, where a $1.2 million, $1.3 million home is a big financial purchase, you're probably not coming at it with a 50% loan, right? We're probably just scraping together the 20% for that down payment. So when the interest rates change there, you're going to be more affected by those interest rate changes. And as those have come down, that's the market that we're seeing explode. Like, so, crazy to call it starter homes, but starter homes. So basically homes that are under that kind of $1.5 million price point, that's really where we're seeing a big explosion in activity. But as we move up the chain, you kind of get to that 1.5 to, let's say, 2-ish million, it starts to slow down quite drastically. And once you're into the luxury home market, where we're dealing with properties kind of in the mid twos to fives, it is a very quiet market. It's never a fast market to begin with, but it is right now. Those homes are sitting, especially newly developed ones that have been, kind of infill projects by developers. They're not selling right now. So our clients who are in the luxury space have been able to negotiate some very good deals on luxury homes right now.
Yeah, that's interesting. And it would be interesting to also compare and contrast that with what's going to happen in outside the GTA in the smaller towns, the smaller markets. What's funny is in the recent years, a lot of the demand in those markets were driven by the overflow of the Toronto market. So people who felt like Toronto was just too expensive or they couldn't afford it, they started this exodus in droves out to the Hamiltons and all these other smaller city centers around the GTA. And so we saw major price increases, 25, 30, 35, 40% increases year over year in some of these areas. These local economies actually can't support that type of price growth. It actually just didn't make any sense. It was purely speculation, and it was purely because it was basically Toronto buyers who couldn't afford Toronto anymore. So they started going further and further out. And what happened was in 2022, 2023, when interest rates started going up, what happened was those places that went up 30% came crashing down 30%. We didn't see that in Toronto. Toronto actually had a lot more stability. The point being is that the demand, the intrinsic demand for some of these smaller city centers just actually isn't there, and the local economy can't actually support those types of prices either. So what we're going to see is a slower recovery in some of these city centers, because again, if it's not driven by local local demand because of population growth and economic growth and industry growth and job growth and those types of things, then what happens is that demand, if it's not coming from Toronto, that demand just isn't going to be there, and it's going to take a lot longer for it to recover. So I think what we're going to see is we're going to see recovery in Toronto first, and then after that, you're going to see a kind of a fast follow or maybe a slow follow of these other smaller markets surrounding Toronto.
Yeah. And I wouldn't be surprised we see that soon, right? Like we're recording this, today is November 22nd. And so in a week or two, we'll have the November numbers. And I wouldn't be surprised we start to see pricing recovery happening because these bidding wars do drive up prices, right? So we'll see. We'll see how that short-term prediction goes. Let's flip it over to the condo market because I think it's a very different story there. You know, when we're talking about this crazy demand, when we're talking about these like bidding wars, that's certainly not the case in the condo market. It is miserable, and we don't see the signs of it getting better. And what I mean by signs is specifically our favorite metric is absorption rate, which is Treb calls it the sales to new listing ratio. So basically what that is when a new property comes to market, is it selling within 30 days? So is the market accepting of the product and pricing? Because if it is, it will sell within 30 days. And, kind of a healthy absorption rate is, call it anywhere between 0.4 and 0.6, so 40 to 60% of homes being sold within that time period. But that's an aggregate number, right? That sits across, all our product types, so multifamily to single family to condos, townhouses, they're all rolled together. If you extract out single family activity from that and you just look at condos, it's considerably worse. And that absorption rate has not shown signs of improving. And until we see people basically accepting the prices of condos at the amount of inventory available, the market won't turn around, right? That's our leading indicator. It has to get cheap enough and the inventory, I guess, either scarce enough or too good of a deal that people start buying them again, right? When that happens, then we know we've hit the floor. And that hasn't happened. Pricing is continuing to trend down. Days on market are still very long, and absorption rates are still very, very low for condos. So
low absorption
my
rate.
prediction.
So low absorption rate means it's a buyer's market or a seller's market.
Absolutely a buyer's market, right? Like you go in there and wheel and deal.
Negotiate the hell out of it.
It's a crappy time to sell a condo.
Yeah.
Yeah, I love how some people in this space, in the realtor space, will say it's both a good time to sell and a good time to buy. It's never. You can't have both. That's just not possible.
That's just a realtor trying to get another deal done.
Right? Yeah, just trying to get more business, right? Let's be real. It's not a good time to sell. If you don't have to sell, don't sell your condo. It is a great time to buy. Where I think, with looking into 2025, the things I need to confidently say the market has returned for condos is an uptick in absorption rate, right? It's low and continues to be low. So if that starts to come up to, 0.3, 0.4%, then I feel like we've hit that bottoming. And especially condo buyers, they're even more sensitive to rates than, a single family home buyer. So rates down, absorption up, and for some of the inventory to be worked through. We're sitting at record inventory levels. And, until we work through that, like those things are sold, we have a more supply than demand situation in the condo market.
And what about units that are coming online, Ming?
Yeah, and there's another great point. We've got thousands of units coming online still from developers, and a bunch of them have pushed out projects, put them on hold. But the reality is, we won't see the impact of that for another, 12 to 24 months at earliest, right? And so, we could see a slow condo market for a year, right? And what that means in terms of pricing, I think will be really interesting to see. Uh, I just don't see it getting much better any earlier than the next 6 months, right? There's just too much inventory out there, and more inventory coming online to make it to have that market turnaround.
Yeah. No, that's interesting. And so, what's interesting is to see where the opportunity is. So you mentioned it. You mentioned it quickly. If I'm a young professional and just looking for a place to live, and I want to buy a condo, this might be a great time because it still creates that window of opportunity. We haven't seen recovery in the condo market quite yet. We might not see it for another 6 months, or possibly even a little bit longer. So you're not in a huge rush, but you do have an opportunity here, and so this could be a good time if you're looking for a primary residence in the condo side. And then on the flip side, if you're the seller of a condo, this is low. It's going to be a low time for you. How long is it going to take for recovery? That is going to be the question. People have bought a lot of pre-construction condos, and their pricing is less than what they bought it for several years ago, and they really want to get out. They really want to redeploy that capital, but they're saying to themselves, "Well, maybe it'll look better in 6 months or 12 months." It may, but I think it's going to be slow. It's going to be slow because there's a lot of inventory that needs to be absorbed by the market, and it just isn't. The indicators aren't quite there yet. But what's then going to be interesting is this is probably going to dovetail with our next, the third part here, and that's the investment market. We're going to talk about the investment market in a second. But what's interesting is to not just look at your condo in isolation. Look at it as if it's an investment condo, let's just say. Look at it as part of a more holistic plan. So we're going to talk about kind of the investment market right now, and that's really going to be the investment multifamily market that Volition really is a market leader in. What's interesting there, and I'm going to kind of steal your thunder here, Ming, and I'm just going to dive right in, is that even though the single family freehold market is picking up and has got some steam and has been crazy the last little while, the investment market has still been fairly quiet. And why do you think that is, Ming?
Yeah, I mean, we've got a working theory about this. We love to make database decisions, but data doesn't exist behind this. The theory is that most investors, not most, a lot of investors are mom and pop investors, especially when we're talking about smaller multifamily, triplex, fourplex, 4+1. They're not large institutions that are doing this. And down payments for these kind of investments, they're typically coming from HELOCs or some other loan. We know this anecdotally through our own investors. They're often borrowing those down payments from other sources of equity, right? And right now, it's still very expensive to borrow that money, right? Your prime +1 or prime +2 or whatever your HELOC rate is, but they tend to be a lot less competitive than mortgage rates. So to get that down payment is expensive still. Even though there are, we've been in this window where we have cash flowing properties in Toronto, which is wild, right? One of the second most expensive city in the country, and I would say one of the best tenant profiles, and we're cash flowing right now, and it's because the sellers of those investment properties have had to drop their prices to make it more attractive to overcome the fact that buyers are borrowing for those down payments. So That's the theory, and I think it does hold up, especially talking with some of our investor clients. But it has created an opportunity in this space. Kind of going back to what you were talking about with some of those opportunities, where it's this rare window in the city where you can buy cash flowing properties. Usually, we're fighting to find cash flow, but it's not as difficult these days. And that's in context, right? So usually cash flow we find like one or two a month at best. Right now we're finding one a week. So it's better, but it's still a very rare thing. But yeah, there is this opportunity, and our investor pool, they're certainly a lot more sophisticated, right? Like the people that follow Volition, they are into the macroeconomics of things. Our Hive, which is our big chat group with all our clients, is super active with people sending policies back and forth and stuff like that. So they tend to be a much more sophisticated group, and they've been very active. They've been buying up investment properties right now because they're trying to get ahead, and they're trying to get into the best properties in the best areas, because that's how you're really going to make money in this game, instead of fighting over the scraps in bidding wars, which is a lot more typical of the Toronto market. So,
Yeah, no, it's interesting because
any thoughts about that?
yeah, I mean, it's a couple of things. So what's really interesting is that you can get in there and you can actually, for once, negotiate directly with the seller. Instead of fighting with the next guy over price, I can get in there and I can talk to the seller. I can understand the seller's pain points. I can understand what the seller's trying to achieve. And what I can do is I can help create a win-win situation for them. They might be, their pain point might be they just need cash quickly. They need a quick close. And maybe I can offer that to them. Maybe their pain point is they've got they're just sick of being a landlord. And so maybe I can help solve that problem. Once you can get in there and if you can understand that, there's so many things you can do. We can negotiate vendor takebacks. We can negotiate agreements for sale. We can negotiate us starting the renovation planning process, like getting surveys, getting drawings done, getting submitting for COA, submitting for permits while we don't own the property yet. Right? There's so many different things. And this is why it's really, really important to work with an investor-focused realtor like Volition, because we understand that it's not always about price. On top of the fact that pricing is low right now, and we can get in and get cash flowing properties right from the get-go. Before, we would normally have to get in there, do renovations, which takes more capital, takes more time. You're holding the property for even longer without any rents coming in before you get to cash flow. You can get cash flow on day one. That's unheard of in the Toronto market. So what's really interesting is we have this window of opportunity because the investment market typically lags the single family market. We're seeing an acceleration in the single family market, which gives us the confidence that the investment market is going to follow. And so it's created this window of opportunity, this short, undefined time frame, in which you can still get cash flowing properties. You can get in there. You don't have to compete on price with other buyers, 3, 4, 5, 10 other offers in there. It's really interesting, and I think it's one of the best buying opportunities that we've seen. And I feel like this is a little bit different than before, because when we saw the run up in prices before, back in 2023, early 2023, when things started getting crazy again, that was a bit speculative, because at that point in time, I mentioned this before, interest rates had been held and people had preemptively jumped the gun to say, oh, okay, this is the end of the interest rate hike cycle. We know now we're at the end of this interest rate hike cycle. So we know that what's coming next is going to be a recovery of the real estate market here in Toronto. And so having that confidence and knowing that real estate investment properties are still kind of low, it creates this window of opportunity. And this also comes back then to what I was talking about, condos. So a lot of people, imagine you have an investment condo right now, and you're thinking, oh crap, I don't want to sell my condo right now, it's low. But let's play this out to let's take this up to the 50,000 foot view. Look at it a little more strategically. Look at it with a more sophisticated lens. Yes, I might be selling my condo while it's low. It might be selling for 600 instead of 650. I really wanted 650, but I'm only going to get 600, and that's crappy. I totally get it. It is crappy, but if it's part of an overall investment plan and strategy in which you're going to take that equity and maybe redeploy it into a better asset, a bigger asset. Right now, you can still get maybe, let's just say, an investment property that was normally 1.7 million, you can get for 1.5 million or 1.55 million. So you're getting you might be taking a $50,000 haircut on the sale, but you might be getting a $150,000 discount on the buy because it's a much larger asset and a much better asset over the long term. So I just wanted to at least call out the fact that don't be myopic. Don't just look at your condo and go, oh crap, I wanted 650. I can only get 600 right now. I'm going to wait 12 months. Look at it a little more holistically and think about what you're trying to achieve and think about more strategic ways to get to better outcomes. And so that's what we do here at Volition, and we help you understand those opportunities, because sometimes you know, in isolation you just might be acting with blinders on, right? We want to help you understand your holistic situation and then help you decide what's actually what the best strategies and the best path is forward for you.
Yeah, we're not you come to us and you're like, oh, I want to buy an investment condo. Like we tend to talk you out of that because that's not holistic. That's running right to a potential solution without actually looking at what you're trying to achieve with your investment goals. So it is something that we pride ourselves on, is taking a more advisory approach to real estate investing. And if you are interested in working with us, all the links are in the show notes below here. Anything else you'd want to wrap up then with, Matt, for 2025?
Well, let me look into my crystal ball. I think what's going to be interesting is going to be our next video, actually, right?
Yes. So stick around for our next video, because we're going to talk about kind of the economic fundamentals, some of the indicators that we'll be looking from in policies in Canada, policies in the US that may be impactful to where we see things going in 2025. Because Matt and I don't really believe in crystal ball exercises more than we believe in keeping track of indicators that can help you understand where things may be going.
Yeah,
so
because we've been talking.
It's a good place for us to wrap up.
Yeah, well, I was just saying, like we've been talking about the single family market, the condo market, and the investment market, and we've been making bold assertions that it's recovery. We're in recovery phase. We're single families are already crazy. Investment properties are going to be fast follow. But what we haven't, the reason that we have that confidence is because we're looking at those trends and those indicators and absorption rates and stuff like that. But we also understand something that most people don't look at. And Ming had touched upon it, and those are the economic fundamentals. Those are the things that fundamentally underpin the strength of the market. And we understand those things here in Toronto. So that's why we can speak with confidence that we know that Toronto over the long term is going to still be a great place to invest. But right now, what's more interesting is going to be talking about the timing of things and understanding that, for example, interest rates play a role in stuff, right? But what kind of role does it actually play? And if I'm a sophisticated investor looking at things like interest rates, how do I make my decisions based on interest rates and where they're going? So that I want to just call that out, because that is where the opportunity is going to be. And this is why I keep on talking about this window of opportunity. In our next video, we're going to be talking about why there's this window of opportunity right now. And it's going to be based on actual economic fundamentals and understanding the difference between that and market influencers.
Awesome. So hope to see you guys in the next video, and thanks a lot for sticking around.